Yes. So friends, good evening, all of you. This is Sai Krishna Vyas. Okay. So I have been working as a professor for chartered accountant students since last 9 years. So I started my career as a professor and worked for some premium institutes, premier institutes in Bangalore, Hyderabad, and um, and here I am. So today's our topic is going to be on accounting process, right friends? So what is meant by our accounting process? So before I start with accounting process, let us discuss some very basic details about accounting, this being the first class. So let us discuss some basic details about accounting. Why should I learn accounting as a separate subject? Okay, so initially friends, basically what we do is, this accounting is something which everybody of us, directly or indirectly, knowingly or unknowingly, everybody of us, every one of us will definitely follow accounting. In what way, sir? Say for example, you take your father, okay, take your parents. So what your parents does, probably once for every year, they'll sit down, they will try to chart out what is our income, salary or business profit or whatever it be the case, and what all expenses we have: rent, medicines, education for children, right, and minimum provisions, stationery, etc., etc. They'll put up all the expenses, and then they will try to find out how much is left over with us, and then how much to save, how much to actually spend for enjoyment, entertainment, right? So this sort of a discussion, this sort of a planning usually happens in every family. Correct, friends? So let it be your family or my family, it keeps happening, right? So what are they doing is, they are trying to list out all the incomes and list out all the expenses and trying to find out the savings. It is a simple example for how accounting is done. A simple aspect. Okay, of course, some people call this as financial planning also, of course, but I say is a process of this, the first step of accounting, right? So we plan our incomes and plan our expenses. So that is what will happen in each and every family, right? Going to the next level, say for example, my dear friends, imagine you are going for a trip. Okay, you are going for a trip, and imagine you are the manager for the trip. Okay, you are the manager for the trip for your college. All the students are going for a trip and you are the manager for it. Okay, so in that case, try to visualize, you are supposed to collect money from all your friends, correct? And then you are supposed to spend it. Say for example, you will say you will ask all your friends who are all coming. Okay, they have to pay 1,000 rupees each. Imagine 50 people are coming. Okay, totally how much money you will collect, my dear friends? 50,000 rupees you will collect. Okay, sir. Out of 50,000 rupees, imagine you have to pay for the bus. You have to pay for the bus driver and the cleaner, their maintenance and all. You have to pay for the diesel, right? You have to pay for its rent, and you have to pay toll gates, for the toll gates. And after reaching the location, you have to pay for all the accommodation. You have to pay for the food of all the people, right? And you have to pay what all entry fees, everything you will have to pay. And then after coming back, just imagine total 50,000 rupees you have collected, and imagine friends, you are left with nothing in hand, and over and above you have spent 500 rupees extra out of your pocket. So how do you feel? You feel like going to all your friends and asking, "Arey boss, I have spent more money here, you have to contribute and give my money back." Yes or no? 500 rupees you have spent extra out of your pocket, so you'll ask everybody to contribute, and so that you'll get back your 500 rupees. Yes or no? So this is the normal scenario that we usually see. Okay, but as soon as you ask this, your friends will ask you, how 500 rupees extra expense has happened? Can you show the expenses, please? So immediately, if you start telling them that no, actually I've spent this much for toll gates, this much for food, this much for driver. If you say like this, nobody will believe your words. But in case if at all you bring some document saying that, see, the proof that I've paid so much to the restaurant, I've paid so much for the hotel, I've paid this much for the bus, I've paid this much for the diesel, okay, I have paid this much for the toll gates. If at all you show with the proofs, list it out and show the total expenses, everybody will believe. Yes or no, my dear friends? So this is a normal tendency that we do not remember. We have to write. We write along with the proofs to prove that these expenses actually happened. Yes or no, my dear friends? Yes. Now, what have you done in this case is again a small introduction of accounting, a small first step of accounting you have done. So what you have done is all the expenses that you are going to incur, you have put it up in a chart and then shown to your friends and all, right? So that you are proven that yes, you have spent some 200 or 500 rupees extra and everybody will start contributing back. Correct, friends? So this is one small example of how accounting is done. Just imagine now, for one single trip, you have to prove them, you have to show them, right? You have to showcase them, all your expense and all this stuff. Imagine you are a travel company, okay? And you make such trips on a daily basis. Imagine you make such trips on a daily basis. Imagine the kind of workload that you will have. Correct? Is it easy to manage? No. Imagine you have 10 trips per day like that. Throughout the year, 3,650 trips, my dear friends. 3,650 trips. Is it so easy for you to sit and write each and every expenditure? Very much tough. Like maintaining a pocket book. Like if it is a single trip, you can maintain a pocket book. In the book, you will write everything, put it in the pocket back. It is easy. But imagine 10 trips per day into 365 days. You are a travel company, friends. Understand? So, which is practically not possible to write in a pocket book and to maintain that way. Correct? So, for this, it requires some scientific way. It requires a proven way of recording all the transactions in such a way we will never we will never do any mistake. We'll be able to prove how much expenses or how much incomes we have generated, and we'll be able to showcase. Let it be to the travelers, let it be to the government, let it be to your owners. You are supposed to showcase. For that, you are supposed to write all the details of your expenses, incomes and everything. Correct, friends? So what I mean to say is, my dear friends, in case if at all we maintain a small pocket book for our family and for a limited purposes, it is okay. But beyond a certain limit, you cannot maintain accounting in a pocket book. It requires some scientific way, scientific process of making the accounting. That is where is our topic today. That is about accounting process. So our elders, those who have done accounting, okay, our grandparents probably, okay, so those people, they have introduced a concept called accounting process. What do they say? If at all you do this accounting process perfectly, my dear friends, you will not do any mistakes while doing accounting. You will not do any mistakes in making accounting. Understand? And moreover, second most important aspect is, by following this accounting process properly, friends, you can bring efficiency and control of your organization as well. You can bring in a lot of control as well. How is that happening and all? Of course, in our coming sessions, coming class and all, we'll keep discussing. But let us stick on to our present topic today. So today's topic is going to be on accounting process. So what is meant by accounting process? Okay, so probably many of you would have already studied, but still I would like to repeat that topic for you. So accounting process, we call a process of 7 steps. We call a process of 7 steps as accounting process. 7 steps, my dear friends. So what are these 7 steps, my dear friends? It is simply called IRC. Acha, sir, what is this IRC is all about, sir? IRC is all about this. Friends, IRC, I stands for identifying. I stands for what? Identifying. And R, recording. And next, C stands for classifying. Right? And then S stands for summarizing. And next, A stands for analyzing. And then analyzing, and then interpreting. And then last, C stands for communicating. And C stands for what, my dear friends? Communicating. So this is what our IRC, short form to remember. Okay, so 7 steps of accounting process, which is our IRC, stands for. First, the process of identifying, recording, classifying, summarizing, analyzing, interpreting, and then communicating. This is our process of accounting. Okay, accounting process. Fine, my dear friends. First of all, let us go in depth of each and every element, each and every step, and we will try to know what actually we are supposed to do in that step. Okay, first of all, identifying. When it comes to identifying, friends, what are you supposed to identify, sir? You are supposed to identify, first of all, there will be a lot of activities going on in our business number from in a day-to-day life. In a day-to-day life, lot of activities will keep on happening in our business, starting from the time you open the shutter of your business till you close. On a daily basis, you do a lot of activities, correct, Amma? So out of all those activities, my dear friends, you are supposed to identify which are all transactions, and which are all events, just events. You are supposed to identify these two. First of all, what is that, friends? First of all, out of all the activities which are happening, which are all transactions and which are all events. Okay, now, sir, what is the primary difference between these two, sir? What is a transaction and what is an event? Let us try to focus. First of all, friends, whenever an activity is happening, first you have to check, as an accountant, you have to check, is there any way that I can measure that activity in monetary terms? I can measure that particular transaction or particular activity in monetary terms. Sir, measure the activity means what, sir? Very simple. Say, for example, you have given an appointment letter to your to a new manager. Okay, so if at all I ask how much appointment letter you give, can you measure it in terms of money? And can you tell me? Can you tell the transaction in terms of money? No, you gave an offer letter. How much offer letter you gave? It is not a transaction. Understanding, friends? Next, most important. Imagine for the same manager, you gave salary. You gave what? Salary you gave. Now you tell me, if at all I come and ask you how much you gave, you can say, yes, I gave 25,000 rupees. Now what are you doing? You are trying to measure the transaction in terms of money. Correct, my dear friends? In case, if at all you are able to measure such kind of, if any transaction is able to be measured in terms of money, that is called transaction. But event means what? It is just an event. Something has happened in our business. It cannot be measured in terms of money. This cannot be measured in terms of money. Event cannot be measured in terms of money. Understanding, my dear friends? Say some more example. For example, my dear friends, I'll ask you, like, today you open, today, for example, today office started at 9 o'clock. Today you entered, and then 9 o'clock you turned on all switches and all. How much you entered? Can I say that? Can you measure it in terms of money? Definitely not. If at all I say, when you are opening, you got a bill. You got an electricity bill. How much electricity bill you got? You can say definitely, yes, electricity bill of 200 rupees or 500 rupees electricity bill you got. So you can measure something, if at all in terms of money, you call it as a transaction. If event, if at all any activity cannot be measured in terms of money, you call it as an event. Sir, why should I recognize all these things, sir? First of all, being an accountant, don't I have any other work? Why should I do all these things? Is very simple, my dear friends. Being an accountant, you are supposed to ignore all your events. You are not supposed to touch any event, my dear friends. It means we have to think only about transactions. It means we should be highly commercial. First of all, if somebody comes and says something for you, do not listen to them. First listen to them, and if there is no monetary consideration in that, there is nothing, money is involved into that. If you cannot quantify that particular activity in terms of money, if you cannot measure it in terms of money, tell them, don't come to me and tell this same story again. Get lost. I don't want all these things. Being an accountant, I want those activities which can be measured, which can be quantified in terms of money, and I will be recognizing them as transactions, and I want only transactions, and I will not at all be considering events at all. I'll not be considering events at all. Got it, my dear friends? Okay, so I'll be looking only for transactions. Right, my dear friends? So once you recognize your transactions, what else to be done? Very, very good. Now, the second thing that you have to identify is as soon as transaction happens, as soon as any transaction happens, friends, minimum there will be two accounts that will be affected. Minimum there will be two accounts which will be affected. So, I would like to take you in detail. So, which will be affected? You are supposed to identify which two accounts are affected because of that particular transaction. Understanding, friends? So, which two accounts are getting affected? Sir, you are talking about two accounts now, sir. Totally, how many such accounts are there, sir? Very simple, ma. You have totally, actually, friends, there are two ways actually to understand these two accounts. One is your traditional approach, and second one is a modern approach. Okay, so traditional approach actually divides your accounts into three categories. In what way? Personal, real, and then nominal. Personal, real, and nominal accounts. Your traditional approach divides your accounts into how many types? Three types: personal, real, and then nominal accounts. But we are not at all going to follow this particular method, friends. Okay, if at all you are following this series of videos from beginning to end, I'll be discussing in my last class, I'll be discussing about personal, real, and nominal accounting, because this traditional approach, friends, today in this most dynamic world, okay, dynamic business environment, even accounting has to be dynamic, my dear friends. Accounting has to be dynamic. But this particular traditional approach, friends, is designed by our grandparents. So what is happening with this traditional approach is, this will not hold good for many transactions. For many transactions, you cannot justify how you are able to record the transactions by using personal, real, and nominal accounts. So for this purpose, we will not follow traditional approach now. We will follow traditional approach. I'll discuss with you, because it is there in your CA syllabus. I'll discuss personal, real, nominal account details in the last class. The day I take personal, real, nominal accounts class, that is going to be the last class for you. Okay, so let us see. So it means for our discussion, we are going to follow which method, my dear friends? Modern approach of accounting is what we are going to follow, my dear friends. Okay, so what is this modern approach and how is it being followed? Let us discuss in detail. So when we are talking in detail about modern approach, friends, we divide all our accounts into four categories. How many, ma? We are discussing about modern approach. And in this modern approach, we divide all our accounts into how many categories, ma? Four types of accounts we divide. We divide all our accounts into how many types, ma? Four types of accounts. What are those four types, sir? First of all, first one is my assets. First one is what, ma? Assets. Second one is my liabilities. Second one is what, ma? Liabilities. And third one is my expenses. And fourth one is incomes. So I divide all my accounts into four categories, friends. First one is assets, second one is liabilities, third one expenses, and fourth one incomes. Now, what I meant to say was, whenever a transaction takes place, minimum how many accounts will be affected, ma? Minimum two accounts will be affected. Out of how many, sir? See, out of these four: assets, liabilities, expenses, incomes. Out of these four, two accounts minimum will be affected. I'm talking about the minimum number of accounts that will be affected, my dear friends. Okay, so sometimes it can be both out of assets, sometimes it can be both out of liabilities, sometimes it can be both out of expenses, sometimes it can be both out of incomes, or sometimes a combination of asset and a liability, asset and expense, asset and income, liability and expense, liability and income. It can be expense and income also. Sometimes it can be of any combination, my dear friends. It can be of any combination. Understand? But it will be affected. And once it is affected, my dear friends, okay, sir, affected you are saying, na? Affected means what, sir? Affected means very simple, ma. Affected means we are talking about two aspects. Either the account may increase or account may decrease. I'm talking about two aspects of affected. What are those, ma? Either increase or decrease. Okay, so let me take some examples and I would like to explain you, my dear friends. Okay, let us take the first example where imagine we purchased a building. We purchased a building. You have given cash, you have paid in cash, and you purchased a building. Okay, now my dear friends, now what is happening with this? You have a building, correct, and you have cash also coming into picture. Now what will happen to the buildings, ma? If you purchase a new building, your building's balance will increase. Of course, the total buildings that you have will increase. If you start with 0, it will be in positive. If you already have some 10 lakh rupees worth of buildings, now you are purchasing 3 lakh rupees more. Total your buildings value will become 13 lakhs. Correct, ma? So buildings value will become 13 lakhs. So buildings value will increase. Not only that, what have you done while paying? You have paid in cash. When you pay cash, the cash balance with you will decrease, my dear friends. Cash balance with you will decrease. If you observe, buildings with you will increase, cash with you will decrease. Yes, you see, it is getting affected. Two items are getting affected. One is building, second one is cash. First one is building, second one is cash. Both are getting affected. So that is the meaning of affected, my dear friends. So whenever I say two accounts are affected, affected means what, ma? Either the account will increase or the account will decrease, my dear friends. Increase, decrease, which we call it as affected. Okay, so let us move on. So let us take one more example, my dear friends. Let us say I paid salaries. Okay, so when I paid salaries, ma, salaries, definitely your total salaries that you have paid will increase. Obviously, see, ma, till date you have paid, for example, for your housemaid only, you think, okay, for your housemaid only, you have paid, say for example, 5,000 rupees till date. Till date, you have paid how much, ma? 5,000 rupees. Today, you paid 1,000 rupees extra. How much you have paid, ma? 1,000 rupees extra. So, obviously, the total expenditure that you have paid, the total salaries that you have paid will become 6,000. Correct, ma? 5,000 and today's 1,000 rupees. Total 6,000 rupees you have paid. So, your total salaries will increase. And at the same time, what will happen? Your cash, because you have paid out of cash, the cash balance with you will decrease. Obviously, you have paid in cash, nama, so your cash balance will decrease. If you see, one is affected, both are affected. Okay, there is no rule that one has to increase, other has to decrease, friends. Sometimes both also may increase. Say for example, you went to bank. Okay, you went to bank and bank gave you a loan. Bank gave you what, my dear friends? Bank gave you a loan, my dear friends. Now, if bank is giving you a loan, your loan will increase. Say for example, already existing 5 lakh rupees loan you have. Today, you took 2 lakh rupees extra loan. So total loan with you will become how much, ma? 7 lakhs. Already 5 lakhs existing. Now you have taken 2 lakhs. Total it will become 7 lakhs. So it means your bank loan will increase. Because bank has given you loan, the money is with you. The cash, or if your bank balance, the bank has dispersed that money to you, that money is with you now. It means your cash or bank balance will also increase. See here, both have increased. Your liability, your bank loans from 5 lakhs, it became 7 lakhs. And also your cash balance from, say, your cash balance also has increased. To that extent, you have got your cash or bank balance to your hand. Correct, ma? So here, both the accounts have been affected. In what way they are affected? Both have been increasing. Both have increased. Understanding, my dear friends? So that is how. Okay, so I have given you 3 examples on how accounts are affected, my dear friends. How are accounts affected? Either the balance will increase or the balance will decrease. That is how the transactions usually take place. Okay, now? Right. So let me first summarize you what we have discussed under identifying. So what have we discussed under identifying, friends? So first point is that we have to identify only the transactions. Only the transactions are to be identified first. Okay. And then we are supposed to identify which two accounts are getting affected. You are supposed to identify these two first. Which two accounts are getting identified? These two are to be identified first of all in our first step. That is our first step of identification. Okay, Nama? So again, before we go further, so what did we start with? We started with accounting process. Accounting process has got how many steps, Ma? 7 steps included. In short form, we call it as IRC. The process of identifying, recording, the process of identifying, recording, classifying, summarizing, analyzing, interpreting, and then communicating. We have got 7 steps involved. So in that, we have started with the first step of identifying. What are you supposed to identify out of all the activities happening in our business? Which are all transactions, which are all events? Sir, basically what is the difference, sir? Simple. Those which are involved in money, which can be measured in terms of money, those activities which can be quantified in terms of money, those are called transactions. If you cannot quantify, if you cannot measure in terms of money, they are called our events. You cannot measure in terms of events. First of all, why should we actually look at them, sir? Because you are not at all going to recognize your events. You are going to recognize only transactions. You want only transactions. You do not want events. Okay, friends. Now, taking a transaction, immediately you are supposed to identify which two accounts are getting affected. Which two accounts are getting affected. Friends, every transaction, minimum will affect 2 accounts. So which 2 accounts are getting affected is what you are supposed to identify. So for you to understand, we divide 2 accounts. We have to understand, friends. We got 2 ways of understanding it. One is in traditional approach, one is in modern approach. Traditional approach means what? Which has been done long ago by our grandparents. Those very elders have made it. Those days business were were not at all dynamic. Very simple business transactions used to be there. At that time, they used to divide the accounts into personal, real, nominal accounts. But of course, in present days world, so this classification of accounting into personal, real, nominal account will not hold good for many transactions. Many transactions cannot be justified in this particular way of classification. For this purpose, what we do, we follow modern approach. Modern approach will ensure that you are doing accounting in a perfect way, friends. There will be no mistakes at all. Okay. So how is it done is very simple. So, and I told you that personal, real, nominal account things and all I will discuss with you in the last class of accounting in this series of videos. By the way, friends, please ensure that we are going to discuss end to end, friends, from very basic chapter of your CA to the end of your foundation course. Everything will be there on this YouTube channel. So please ensure that you are subscribing to this channel, and please click the bell icon so that you get a notification whenever we upload any new video or whenever we come forward for a live. Okay, whenever we come with any live. And much upfront, we will actually give you the information about our live classes, and in the description I have given you our WhatsApp number. So what you can do is you can be in touch with us on WhatsApp for doubts clarification or for any other purposes. You can be in touch with us on WhatsApp as well. Next, you can actually log into CAclass.live. Of course, on the day that we are recording, today is 5th of July 2020. On this day, the website is under construction, my dear friends. Probably in 2-3 days time. Our target is by 7th of July 2020. This website should be live in all ways. Okay, in all perspectives. You can log on to the website. You can actually ensure that you grab some premium content out of the website for free of cost. Okay, friends, good. So now we are following only the modern approach. Now, out of modern approach, we divide all our accounts into how many types, my dear friends? We divide all our accounts into, yes, 4 types. What is that? Assets, liabilities, expenses, and then incomes. We divide all our accounts into 4 types. So assets, liabilities, expenses, incomes. Okay, so how will this work, sir? That I will discuss with you. Modern approach we will discuss with you, don't worry. So assets, liabilities, expense, and incomes. Now, what is the meaning of affected, sir? Affected means either the value will increase or the value will decrease. For example, we have taken the first example of, imagine a building. We have purchased a building. Now the building value, either it will increase or the value will decrease. Correct? The value will increase, or for example, if you purchase a building, your building value will increase. At the same time, you have paid in cash, your cash balance will decrease. At the same time, for example, you have paid salaries, my dear friends. When you pay salaries, what will happen? Your total salaries that you have paid will increase, obviously, and cash will decrease because you have paid. Imagine you went to bank and taken a loan. Your total loans will increase, and because you have taken that money to your account, your cash or bank balance will also increase. Here both are increasing. So whenever a transaction happens, friends, there is no rule that either this has to increase, this has to decrease. There is no rule. Depending on the transaction, you have to use our common sense and identify which one is increasing, which one is decreasing. Got it, friends? So that is how the first step of identifying is all about. I hope you are clear. Okay, good, friends. Now, after identifying, what is our second step, sir? Second step is all about what, ma'am? Yes, second step is all about recording. We have it here, you see, we have recording. Okay, so we record. Okay, sir, let me take you through recording first. First step is done. Now we are in the second step. What is second step? And by the way, this video you can view any number of times, as you know very well, on YouTube. Okay, wherever you got any doubts or wherever you have missed the explanation, please revise it and read as many as the number of times you want. Okay, so second step, what do we have, friends? We have recording. We are recording the transaction. Normally, recording the transaction can happen in two ways, my dear friends. Okay, recording it can happen in how many ways, ma? Two ways normally we record. First one, in the form of a journal entry. First one we discuss in the form of what? Journal entry. Second, we can even record in the form of a subsidiary books, in the form of subsidiary book. So you can record in both the ways, either in the form of journal entry or in the form of subsidiary books. You can actually record in both the ways. But for some time, friends, till we come to a certain level, let us not discuss about subsidiary books for some time. Okay, it's an older concept, but still we have it in our syllabus. We will discuss that, but not now. We'll discuss a bit later. So we will discuss more about journal entries now. Okay, journal entry means what, sir? Journal entry means very simple, recording, or in simple terms, writing. In simple terms, writing. Okay, recording or writing of what, sir? The transaction. Recording or writing of what? Transaction. In what way? In the form of debits and credits. Recording or writing the transaction in the form of debits and credits. If you write any transaction in the form of debits and credits, we call that particular way of recording or writing as what, my dear friends? This is called journal entries. Journal entries, sir. Okay, now we have understand this, sir. If you write any transaction in the form of debits and credits, it is called journal entry. First of all, what is this debits and credits, sir? Okay, so to understand about debits and credits, my dear friends, I have to tell you a story. Okay, what is that story is all about? Long ago, so long ago, very long ago. Okay, so what happened was, there were mathematicians, and then out of the mathematicians, there are some people coming out and claiming themselves as accountants. They came out, some people came out and started claiming themselves as what? Accountants. Acha. Now, mathematicians were more in number those days. I'm talking about our grandparents' time. Okay, mathematicians were more in number actually than accountants. Okay, so now in this situation, what happened? Mathematicians got a big they got anger. Why? Because there are some people coming out and claiming themselves as accountants. But these accountants, what do? They use addition for increase. Correct, ma? For example, I told you, you already have 10 lakh rupees worth of building. Now you purchase 3 lakhs. Your total building's value will be 13 lakhs. What have you done? You have added and recorded. Yes or no, ma? And then otherwise you will subtract it. Say for example, today I have a bank loan of 5 lakhs. I repaid 1 lakh. So my bank loan will become 4 lakhs. My bank loan will become how much, ma? 4 lakhs. So what have I done here, my dear friends? I have actually, what have I done? I have subtracted. So addition and subtraction belongs to whom? Mathematicians. Now, and also we use the same numbers, hundreds, thousands, lakhs, crores. So we use the same numbers which are actually taken from mathematics. Correct? And these people are claiming themselves as what? Accountants, a separate set of people. We are not mathematicians. We are accountants. We are not mathematicians. We are accountants, a separate category of people. Acha. Now, mathematicians got a doubt and then they asked, what actually made the difference? What is actually the difference between mathematicians and accountants? Tell me the story first of all. How are you different from us? Then accountant said, we are not adding, we are not subtracting, sir. What? You are not adding, you are not subtracting. Then what are you doing? I am debiting and crediting, sir. What? What? I am not adding or subtracting. What are you doing? I am debiting and crediting, sir. What are these terms? Meaningless terms. Actually speaking, meaningless terms. In some Roman or some Spanish or somewhere there are some meanings for it, but in account, as far as accounting is concerned, friends, there is no meaning. Why is there no meaning? In few minutes you will only get to know. Okay, so what did they say? We are not adding or subtracting. Instead, we are debiting and crediting, friends. We are debiting and crediting. You know, mathematicians got furious. Okay, tell me, what is this debit and credit? I know you are adding and subtracting. Out of debit and credit, which one is addition, which one is subtraction, which one is addition, which one is subtraction? Tell me first. Then accountant said very clearly, sir, debit works both as plus also, minus also. It means with the help of debit, you can increase also, you can decrease also. Similarly, with the help of credit also, you can increase as well as you can decrease. Acha, what is this? With the help of debit, you can add or subtract. With the help of credit also, you can add or subtract. Mathematicians ran away. Okay, with one single debit, you can add also, subtract also. But in mathematics, you have only one symbol, plus, for add. Only one symbol for minus, subtraction, minus you have. But for us, in debit, can actually add or subtract. Credit also can add or even subtract as well. Okay, friends. Now, let me get into the story in detail. What have we done as per our modern approach, friends? Yes, our debit works both plus also, minus also. Credit also works both as plus also, minus also. How does this work? Let us get into some details. As we have seen, we have divided all our accounts into how many categories, my dear friends? 4 categories. First one is assets. Second one is liabilities. Third one is expenses. And fourth one is incomes. Correct? Now, what these people have done is they are subcategorizing these 4 accounts into 2 categories. Assets and expense into first category and liabilities and incomes into second category. Okay? Now, what did they say? This category should have a name, Namma. So they named these 2 as debit category. Assets and expenses, they have categorized into which category, my dear friends? Debit category. And they have categorized liabilities and incomes into credit category. They categorized liabilities and incomes into which category, ma? Credit category. Okay, so all the 4 accounts, they divide into 2 categories. Assets and expense into debit category, liabilities and incomes into credit category. And what did they say? Because assets and expense are debit category, if at all they increase, they means what? Assets or expense increase, I will debit them. In case if they decrease, I will credit them. Acha. Similarly, if liabilities and incomes are coming under credit category, so it means if they increase, I will credit them. In case if they decrease, I will debit them. If you observe, debit works as plus also, minus also. Credit also works both as plus also, minus also. If you observe, debit and credit both works as positive also, negative also. Mathematicians ran away. Understand? So saying that accountancy is a separate subject, you have to learn it separately. Chalo. Now let us get into some more details, my dear friends. First of all, let me know, what are these assets, sir? First of all, what is that asset? First of all, asset is all about what do you say? Asset. Our asset. Say for example, I purchased a land. So land is going to be my asset, where you have a right on that particular asset. You have a right of ownership. Understand? Right of ownership. You have a right on that. you call it as asset in simple terms. Now we are actually undergoing basic concepts. Let us stick on ourselves only to the basic level. Okay, we will not go beyond certain terminology also. We will limit ourselves only to basic terminology. So we have a right on that particular asset, either on the ownership, on usage. Say for example, I purchased a scooter. So scooter is my asset. Correct? Because I own it and I control it. Whenever I want, I will take it out. Whenever I do not want, I'll keep it inside and lock it. I have the control over it. Nobody can question me on the usage of my scooter. Correct? Scooter is my asset. Similarly, expense. Expense means what, my dear friends? Expense is simple in general dictionary term also. Expense, say for example, I paid salary. Salary is my expense. Rent, I have to pay. Rent is my expense. Electricity bill has come. Electricity is my expense. Expense for which you let me discuss in detail later. Okay, now sir, next, what is meant by liability, sir? A liability is nothing but a kind of a pressure on us, a kind of what do you say? A kind of weight on us. Say for example, okay, something that you will have to repay. Something that you will have to repay is your liability. Something that you have to repay is your liability. Say for example, you go to a bank and take a loan. Obviously that loan has to be repaid, otherwise bank manager will come and sit at your home. Correct? So obviously when you take a loan, you are supposed to repay. So whenever repayment comes into picture, that will become your liability. Understanding, friends? Liability is something like which has got a pressure on us that we have to repay. Understand? And next, income is something which you need not repay, in simple terms. Okay. Now the question comes is, why are you subcategorizing assets and expense into first category, into one category, and why liabilities and incomes into one category? The reason is assets and expense having the same nature. The nature is payment nature, friends. Both are having which nature, ma? Payment nature. What does it mean? For assets and expenses, both you will pay. For example, asset, I say scooter is my asset. How can that scooter become your asset, friends? Because you have paid for it and then it became yours. Without payment, say for example, whether you paid, you already paid, or you will pay in the future, but you will have to pay, right? You will have to pay. Whether you would have paid full amount or you pay in installments, whatever be the case, you have to pay it, right? So payment will definitely come into picture. And next, expenses. Now can you for expense also you have to pay, otherwise you cannot call it as your expense. Say for example, friends, rent of your house only you take. Rent is your expense. When it will become your expense? When you would have already paid or you will have to pay. Whatever be the case, payment is compulsory. You will have to pay rent at any cost. Correct, ma? So in that case, you are trying to categorize assets and expense into one category because they both are having same nature, payment nature. At the same time, sir, both liabilities and incomes are subcategorized into one category. Why? Because they both are having same nature. The nature is receipt nature. Receipt nature. What is receipt nature, sir? You will take first. Say for example, liability. Bank loan became your liability because you have already taken that money to your hand. You have already taken that money to your hand. Now you will have to repay. You will have to repay. Correct, ma? All of you agree with me? You will have to repay. Okay. Next, incomes. Incomes also, if you are not in a position to take that money, can you call it as your income? No. Obviously, for example, you work for an entire month. Okay. You have to receive salary. Okay. Let us take from an employee perspective. Salary you have to take. So, because you have worked for the entire month, you can say salary is your income. Otherwise, you cannot call it as your income. Yes or no? So that is what you have to keep in mind. This point you have to keep in mind. So for liabilities and incomes, the common nature is receipt nature. For assets and expense, the common nature is payment nature. Both are having the same nature, my dear friends. Okay. So that's why they are categorized into these two things. Understanding, friends? So this is your modern approach chart, friends. Based on this modern approach chart, you are going to record your transactions in terms of debits and credits. Depending on this, how are we going to do that, sir? Wait for probably tomorrow's class. We'll be discussing our journal entries in detail. Okay, but today let us stick on ourselves only to accounting process. Okay, so what are we doing in this accounting process, my dear friends? We are trying to identifying. First step discuss. Second step is recording. So how are we going to record? We record in the form of journal entries or subsidiary books. Subsidiary books, let us forget about that for some time. We have a separate chapter, they will discuss. Okay, but majority of us will follow journal entries. So what is journal entry, my dear friends? Journal entry is nothing but recording or writing a transaction in the form of debits and credits, Okay, so then we call it as journal entries. Now what is that? As I told you, debits and credits. For this, debit works both as increase also, decrease also. Credit works both as plus also, minus also. That story I told you, if you would have missed it, please rewind this video and please listen to that story. Now what is that we are going to discuss now is we have categorized our assets in accounts into 4 categories now, as per our modern approach: assets, liabilities, expense and incomes. Now we subcategorized assets and expense into debit category, liabilities and incomes into credit category. Now what are they saying? Because assets and expense come into debit category, we say if they increase, we are going to debit them. Debit what? Assets and expense if they increase. And next we are going to credit assets and expenses if they decrease. Similarly, liabilities and incomes comes under credit category. So in case if they increase, we are going to credit them, and in case if they decrease, we are going to debit them, my dear friends. We are going to debit them. Understand? So this is how we have recategorized them and we have told. And next, assets and expenses, why are they into one category, sir? Because they both are having same nature. What is the nature, my dear friends? Payment. You have to pay for the expense. Even you have to pay for your expense, asset also, expense also, you have to pay. Understand? Next, for your liabilities and incomes, also coming under the same nature. What is the nature, my dear friends? Receipt nature. Both are having which nature, ma? Receipt nature. Because they both are coming under receipt nature, yes, they are categorized into one category. Understand? So this is how we actually understand about debits and credits. And if at all we record the transaction in the form of debits and credits, we call it as a journal entry. How journal entries work, tomorrow's class we are going to discuss in detail, but today let us stick on ourselves only to accounting process. Now in accounting process, let us move on to our next step. What is our second step, my dear friends? Till now we have completed 2 steps. What are those, my dear friends? First, we have finished off with our identifying done, and then recording. We are just seeing the overview of them. Recording is also done. Now we are moving on to our third step. What is our third step, my dear friends? IRCSIC. See, classifying. So basically, what do we do under classifying? Very simple example I would like to give you. So in our recording, what are we doing, friends? We are trying to write journal entries. Correct, Amma? Where do you write these journal entries? In a separate book. In a separate book, you are going to write your journal entries. Correct? Okay. Now, in the separate book where you write the journal entries, friends, what will happen? Assets, liabilities, expense, incomes, whatever is affected, you are going to write in the same book. Correct? Okay, let me tell you, why do we have to classify them? Let me give you a small story for this. Okay, imagine, friends, at nearby your house there are 2 jewelry shops. First shop is X and second shop is Y. Both are jewelry shops. Okay, X and then Y. You have 2 jewelry shops. Now both in terms of branding same, in terms of quality same, in terms of reputation same, in terms of pricing same, in terms of designs same, everything same. In every aspect, both shop X and shop Y, both are same, my dear friends. There is no difference between both at all. Okay, but the primary difference is coming this way. If you go to shop X, what will happen? All the ornaments are dumped into a big tub. Rings, okay, for ladies will be there, Nama, from here to nails, right? So it's good that ladies, if you have jewels, if at all you are with jewelry, it's good. Anyways, just joking. Now what will happen when you go to shop X? Everything, all the jewelry items are dumped into one single big tub. Understand? It means all the rings, chains, necklaces, everything dumped into one small tub. In my childhood, there used to be a cartoon called Richie Rich. Okay, in that Richie Rich, what happens, that cartoon, that character used to swim in coins. They used to swim in coins, right? So similar way, if at all if you go to shop X, everything is dumped into this. If you want to buy a ring, what will happen? You have to jump inside the tub and start searching for ring. Where is ring? You have to start searching for rings. Understand? That is shop X. But if you go to shop Y, what will happen? All the rings are taken at one place, all the chains are taken in the next place, all the necklaces taken the second place, all other aspects, all things are actually categorized, or they are actually categorized into different categories, neatly arranged. Understanding, friends? And that too, if you go to ring section, in ring section, ladies separately, gents separately. In that again, rings are categorized into age wise: below 5 years, 5 years to 10 years, 10 and above, 20 and above. Age wise also categorized. Not only that, it is even categorized as stone based rings. Understand? Alphabets, plain rings, okay, marriage rings, etc, etc. They have actually divided in best possible manner. They have divided and they have showcased in shop Y. Okay, now imagine if you are a customer, if you would like to purchase some gold items, tell me, my dear friends, whether you will go to shop X or shop Y. Shop Y you will choose. Why? Because everything is categorized. Correct, ma? If at all you apply the same story for accounting, observe, shop X is like our journal book. Where all the transactions, let it be relating to assets, liabilities, buildings, cash, salaries, a bank loan, whatever we have discussed, incomes, everything dumped into one single book. If you want a particular aspect, say for example, you want to know about your sales, okay, same like how in ShopX you have to search for ring. Similarly, you have to go to journal book and start searching sales. Where is sales? You have to start searching for sales. Understand? Which practically not possible. Correct, ma? If the transactions are limited, you can search, but if the transactions are vast, say for example, if on a daily basis, on an average, you do 30 transactions on an average into 360, into 300 days, let us take, okay, into 300 days. So it means you are undergoing almost 9,000 transactions in a year. And is it possible for you to search for sales? Is it possible for you to search like that? Practically not possible. For this purpose, from journal book, we will classify. Classify means what? We will open a separate set of book. In that separate set of book, we call them as ledgers. Okay, we call them as what, ma? Ledgers. We call them as ledgers. In this ledger book, what am I going to do? I am going to categorize. It means all cash in one place. Okay, for example, all building related transactions in second place, in next step. Okay, and next, all sales in one place, and all my expense in one place. So like this, what am I trying to do is, my journal book, where it is messy with all sorts of transactions, I am trying to categorize them into various categories, and that categories where I divide them, I call that as what, my dear friends? Ledgers. Okay, so as a process, after identifying a transaction, so it means whenever a transaction takes place, immediately you are going to record in the form of what? Journal entry. So after recording it in the form of journal entry, what are you doing? You are trying to post it into ledgers. So you call this as recording the transaction. And of course, this is posting into ledgers, classifying in the form of ledgers. Okay, this is identifying. Okay, Namma. So this is the step that you are going to do. How are you going to do, my dear friends? You are going to classify all your transactions into various categories. Assets into one place, expense into one place. Okay, in that all, salaries into one place, rent transactions into one place. You are going to actually classify them in different places, which we call them as ledgers. Understand? Now 3 steps over now: identifying, recording, classifying. 3 steps over, right? And these 3 steps, we call these 3 steps as, first 3 steps of accounting as accounting process, sorry, first 3 steps of accounting process as bookkeeping. We call first three steps as what, ma? Bookkeeping. Sir, what actually is bookkeeping, sir? Very simple. Bookkeeping includes our first three steps: IRC, identifying, recording, and then classifying. These three will be part of our bookkeeping. Sir, why are you subcategorizing them into bookkeeping, sir? Because these are the activities which will happen on a daily basis. Which will happen on what, ma? Daily basis. Every day you will actually undergo these three steps. It means as soon as a transaction happens, you will journalize immediately and you have to post them into ledgers immediately on the same day. Okay, on the same day. That's why first three steps we are calling it as what, ma? Bookkeeping. We are calling it as what? Bookkeeping. Understand? So which will happen on a daily basis. Sir, does it mean that remaining steps, what are remaining steps, sir? CAIC, so summarizing, analyzing, interpreting, and communicating, will they not happen on a daily basis, sir? No, it will not happen on a daily basis. Understand? So let me first explain you that. So first three steps over, sir. What are our next four steps, sir? CAIC, SAIC, the summarizing, analyzing, interpreting, and then communicating. Sir, these will not happen on a daily basis, sir? No, this will not happen on a daily basis, friends. This we will do these four steps only once in a period. Once in a period. Only once in a period we will do. Sir, what is this period is all about, sir? Period. Some people does this on a weekly basis. Some people, okay? Some people does this on a fortnight. Okay, spellings, don't worry. Okay, next, fortnight. Fortnight means what? Once in 15 days we call it as a fortnight. And next, some people will do it on a monthly basis. Some people will do it on quarterly basis. Quarterly, what is quarterly, ma? Once in 3 months. Okay, and some people will do it on half yearly basis. Half yearly basis. And some people will do it on a yearly basis, once in a year. Okay, so what we are trying to say is next four steps of in our accounting process, CAIC. First three steps we categorize them as bookkeeping. Second, the next four steps is actually called accounting. And why are we subcategorizing them as accounting, my dear friends? Because they will not happen on a daily basis. They'll happen only once in a period. They'll happen only once in a period. So once in a period, period means what? It can be a weekly basis, on a fortnight basis, once in 15 days, or a monthly basis, or a quarterly basis, or a half yearly basis, or a yearly basis. You can do the next four steps whenever you want. Understand, ma? But many of our people does it on a yearly basis. Majority of the business that does this on a yearly basis for reporting purpose and all. For internal purposes, ma, as I told you, weekly also they will do. For internal analysis purpose, they will do on a weekly basis, fortnight basis, monthly, quarterly, half yearly, every way they will do it. Okay, depending on the company's policy, depending on their labor, depending on the maturity they have in the accounting, and the expertise that they have. So depending on that, they do it on a different basis. But majority of us will follow yearly basis. This year also can be subdivided into three categories. Okay, first one we call it as calendar year. Calendar year. Sir, what is meant by calendar year, sir? Calendar year is something which starts from January 1st and ends on December 31st. December 31st, which starts from January 1st and ends on 31st December. Our calendar starts like that only, right? January 1st, yes, New Year has come. 2020, everybody have celebrated. 2020 has come. Yes, 2020 is giving you enough of thing with coronavirus, right? Everything jam-packed, right? Anyways, forget about that. So if at all you start your accounting on January 1st and end your accounting on 31st December, okay, you call that as a year and do these four steps in between these dates, you call it as a calendar year. Okay, 1 year, call it as a calendar year if you start on January 1st and on 31st December. In case if at all you start with April 1st, okay, 1st of April, Fool's Day, right? No, accounting year, our financial year beginning day, okay, and end on 31st March, March 31st, and end on March 31st, okay, you call it as financial year. Financial year. Majority of us in India, we follow financial year, my dear friends. It means we start our accounting on 1st of April and end it on 31st March of next year. Okay, that is also a full 12 months period only. So financial year we call. In India, 99% people for reporting purposes follow financial year, friends. Okay, follow financial year. Of course, in some Western countries and all, they follow calendar year. Okay, Nama, forget about that. Okay, even in US and all, they follow calendar year, but we in India, we follow financial year. And apart from that, what is the third category we have, sir? Some custom years also you can follow. Custom years, sir. What is meant by this custom years, sir? Custom years are something which I start on any day of my own choice. Okay, Nama. For example, I got a daughter, and on the day I got my daughter, my luck has changed. Okay, what is that called? My everything has turned into my favor. Okay, my luck has changed in my favor. So what I will do, I'll start my accounting also on my daughter's birthday and end it on my daughter's birthday, or my wife's birthday to same wife next year birthday. Same wife next year birthday. So birthday to birthday. Or some agricultural based companies, some farmers, so what do they do? From Sankranti to Sankranti they will do. Okay, some especially from Jain and Marwadi communities, those who do Lakshmi Puja and Diwali, so from Diwali to Diwali they will do accounting. Understand? Some people start on Vinayak Chaturthi to next Vinayak Chaturthi, or some people follow from what do you call, from Christmas to Christmas, Ramzan to Ramzan. Okay, depending on their customs, their traditions, their beliefs, their approach. Okay, they make their custom approach. Understanding, friends? But here also they will follow one full year, Dasara to Dasara, Ramzan to Ramzan, like that they will follow. Understand? You can make your customized way of making it. There is no way, no one will stop you that why are you doing it from this date to this date. No one will object you. Only thing is, for reporting purposes, we follow financial year in India. Okay, and that's the reason 99% will follow financial year model, friends. Okay, what I mean to say is, in simple terms, in our next steps of psych, summarizing, analyzing, interpreting and communicating, we are not going to do them on a daily basis. We are going to do them only once in a period. Period means this is the meaning. Understanding, friends? Okay, so let me go through. Okay, so friends, usually these videos will be a bit longer because we have to meet our target. Especially these videos are meant for your what do you call that, your November 2020 exams. Okay, hope coronavirus vaccine and medicines come into market as early as possible, and let us start our career again, our academic careers again. Okay, for this purpose, these videos are especially targeted for November 2020, my dear friends. Okay, so before that I have to finish off the syllabus. Okay, I have taken the responsibility that yes, we have to finish off the syllabus, and then you will be prepared for your exam as well. Okay, friends, so please help me in spreading this news that yes, so and so faculty is taking live classes on a daily basis for CA. Okay, how are we going to go about? I will explain you in a introductory video, friends, but you will have 5 classes in a week. One doubt clarification session will be there, especially some specific doubts we will be clarifying. Okay, on the doubt clarification session. One day holiday. Okay, holiday for us and for you also to revise. Okay, now friends, let us move on to the next steps. So till now we have discussed about what, ma? We have discussed about identifying, discussed. We even have discussed about recording, discussed, classifying, discussed. Now let me take you through the next step. What is our next step, sir? Next step is summarizing. Okay, spellings don't worry, ma. Okay, summarizing. What do we do under summarizing? The name itself is telling we are going to summarize. We are going to show information in a summarized manner. In summarized manner, what we normally do is we prepare these aspects. We prepare a trial balance. We prepare what? A trial balance. We prepare, after trial balance, we prepare a manufacturing account. We prepare a trading account. Okay, we prepare profit and loss account. and we prepare a balance sheet. We prepare what ma? Balance sheet. So these are the aspects which we are going to prepare in order to summarize all our transactions. What are all those ma? We are going to prepare a trial balance, manufacturing account, trading account, profit loss account, and balance sheet. Sir, should I prepare everything, sir? No. No. First and last, and even profit loss account also. First, last, and profit loss account, everybody will prepare, friends. Every business will prepare. What all those, which all things ma? Trial balance, everybody will prepare. What is trial balance, sir? Wait for some time, I will get into the details of it later. Okay, in our further coming classes. P&L account, everybody. Profit and loss account, everybody will prepare, sir. Balance sheet, everybody will prepare. Okay, now every business will prepare. But who will prepare specifically, sir? Specifically, which accounts are prepared by whom? Very simple. Profit and loss account and balance sheet are prepared by service providers. Of course, service providers will prepare trial balance also. Trial balance is common for everybody, but especially P&L account and balance sheet only will be prepared by service providers, friends. Sir, who are the service providers, sir? Those who provide service. Okay, say for example, you go to a haircut salon. Okay, salon, what do? They don't sell you anything. Of course, these days products also they are selling, but what do? They provide service in cutting your hair and they'll send you. Correct, ma? So it is a service-based organization. For service-based organizations, what do? In order to summarize, along with trial balance, they'll prepare only profit and loss account and balance sheet. That's it. They won't prepare anything else. Okay, sir. Trading account, along with trading account, profit loss account, and balance sheet, all three will be prepared by whom, sir? Who will prepare? You know, who will prepare? Simple. Traders will prepare. Traders will prepare. Who are traders, sir? Traders are those who actually trade with the goods. Trade with the goods means what? Who actually buy and sell. They will buy the goods in one place and they will take the goods and sell it in the other place. Majority of the businesses in India, 95% of the business are actually this. So what do? They buy in wholesale, bring it and sell it on retail basis. Correct? They'll go to Gujarat or Rajasthan or Delhi or somewhere. They buy it in bulk, bring it to your city, and then they will sell it in retail. Correct, ma? So buying and selling, only just they will buy and sell. So buy and sell what? Goods. If they buy and sell goods, we call them as traders, and those traders will prepare trading account also along with profit loss account, balance sheet. Traders will prepare. That's what I'm trying to say. Traders will prepare. Traders will prepare all those three aspects. Which are all these three aspects, my dear friends? Trading account, profit loss account, and balance sheet. Okay. Next, we have, along with the manufacturing account also, who will prepare, the name itself is telling, manufacturers will prepare all four accounts. It means manufacturing account also they'll prepare, trading also account also they'll prepare, P&L account also they'll prepare, balance sheet also they'll prepare. Okay, Namma? Now, sir. Okay, I understood that. If at all I'm a service provider, I will prepare P&L account and balance sheet, sir. Okay, I understood that. If at all I'm a trader, I will prepare trading account also, profit loss account also, balance sheet also. Okay, sir. If at all I'm a manufacturer, I'll prepare manufacturing account also, trading account also, profit loss account also, balance sheet also. Okay, sir, I understood. All four will be prepared, and everybody will prepare trial balance also. First of all, what are all these things meant for, sir? Let us discuss in detail. Now, trial balance, in short form, TB, not tuberculosis. Okay, TB, trial balance. Now, trial balance is meant for arithmetical accuracy. Arithmetical accuracy. In order to accuracy. In accuracy only I made a mistake. Okay. So anyways, so trial balance is meant for what? To check arithmetical accuracy. It means mathematically have we taken all our numbers, okay, additions, subtractions, balancings, all these things. Did I do everything in a proper manner or not? Mathematically, am I correct or not? To verify, I will prepare a trial balance, which we call it as arithmetical accuracy. Arithmetical accuracy. Okay. Now, in this arithmetical accuracy, my dear, okay, arithmetical accuracy, much more details, much more in-depth details of it, we will discuss a bit later. Okay, now let us go further. Now, what is the next one, ma? Manufacturing account. Manufacturing account. So who will prepare this manufacturing? Exclusively manufacturers will prepare it. Correct? Manufacturing account is for what? To find out cost of production. Cost of production. In order to find out how much is your cost of production, usually you go for which account, my dear friends? Manufacturing account. Sir, why should I prepare, sir? Very simple. These days, producing and selling or buying and selling, two different aspects you have to think of. Just imagine your dress only, friends. The current dress here that you are prepared, that you are wearing. Okay, majority of us are wearing ready-made dress. The reason behind that is you have to go to a shop, buy a cloth, and then matching, you have to buy another one, you have to take it to tailor, you have to give measurements, we have to wait for a few days, and then he will stitch and give you. Correct? It's a time-taking process and costly also. You have to pay for cloth separately, you have to pay for stitching separately, and your traveling cost from cloth shop to tailor shop, to collect it again you have to travel, time consumption, and money is also involved. More money is involved. Correct? So that's the reason what people are doing these days, they are moving to ready-made aspects. So ready-made these days, it is cost effective and time also will be saved a lot. These days I don't understand how our fashion technology works, friends. Fashion technology works in such a way that if at all you go to a shop and take a cloth, you feel that it is stitched for you. Okay, exclusively for you it is. They have taken, when did they come and take my measurements? Yeah, so you feel that way. Correct? So like that you are getting the cloth, you are getting garments these days. Now friends, manufacturing account actually gives you the such kind of cost of production. Understand? So it means you will be able to sit and decide whether to buy the cloth and then to go to ready-made tailor, to go to tailor and then to stitch it. It will cost you 1,000 rupees. Your cost of production in that way gives you 1,000 rupees. If you go to ready-made shop and then buy directly, it will cost you 800 rupees. Which one is better? 800 rupees is better na? Instead of going, producing, standing in line, all these things, giving measurements, instead of doing all this extra work, you go, choose, pick up the dress, wear, check if it is working for you, go and then purchase and then wear immediately. Correct? So time will be saved, money is also saved. So in this way, how did you get to know that it is effective? Because you have compared both the cost of production. Correct? So even manufacturers also does the same activity, friends. For example, all these days, before China's intrusion into our country, they are trying to get into our country, right? So before this, what we were doing, we were not manufacturing, we were buying from China and selling inside the country. Correct? Because there the production is very less. Okay, the raw material and all is very less, so we were depending on them more and more. Now, no way, no chance, we will not depend anymore on China. We will do it ourselves, everything ourselves. We will show the world what we are, right? Anyways, that's again depends on you, friends. Current youth, the present youth, it depends on you, in your hands, how you are going to take the country forward. All the very best in that aspect. But now coming forward, now what do we do? Whether should we purchase and sell or we should we produce and sell? That decision you will be able to make when you find out your cost of production and compare with your purchase cost. So for that purpose, people will go for manufacturing account. Not only that, people even prepare trading account. Who will prepare trading account? Exclusively those who buy and sell. These people who won't produce anything. These people only buy and sell. Who will usually use this trading account? Traders, buy and sell. Now what do they want to find out of this? They want to find out gross profit. They want to find out what? Gross profit. How much money am I making out of buying and selling? Say for example, I am doing water business, for example, water bottles business. I buy each water bottle at 15 rupees, sell it at 20 rupees. How much profit am I making, my dear friends? I'm making a profit of 5 rupees per bottle, which is my gross profit. So you make a trading account in order to find out how much profit you are making in the process of buying and selling. In the process of buying and selling, how much profit you are going to make is my gross profit. Understand? To find out that. For example, imagine you buy at 15 rupees and sell it at 13 rupees. Is it a good business? Not at all a good business. So that's why you should not do such kind of businesses. To understand how you are doing business, you will find out your gross profit. Understanding, friends? That is about trading account. And why do we prepare our profit and loss account, ma? In order to find out net profit. So after all my expenses, how much money will go into the pockets of the owners of the business? Owners of the business. If you are a sole proprietor, you will be the only owner. If you are a partnership firm, you will have partners who are owners. If you are a company, you will have shareholders. Whoever it be, how much money actually goes into the hands of pockets of the owners is this net profit. Understand? All the owners will be eagerly interested how much they earned during this year, how much is my money out of this money. So they will actually be eagerly waiting to learn about your net profit. Got it, friends? That is how you do it. That is about our profit and loss account. Okay, sir. Then what is our balance sheet, sir? In simple terms, I'll write as B by S balance sheet. Okay, it is to understand our financial position. It is to understand about our financial position. We prepare our balance sheet. Sir, what is our financial position is all about, sir? Financial position, we'll have a detailed discussion about that, friends. Okay, in our next upcoming classes, probably in about less than a week, we are going to discuss financial position. Okay, in simple terms, let us just remember this way now. Why do we prepare balance sheet? In order to prepare our financial position. Okay, Nama. Now, what you need to understand is, friends, out of all these that you are preparing for summarizing your accounts, your trial balance and balance sheet, these two are statements. These two are what, ma? Statements. And your manufacturing account, trading account, and then profit and loss account. All these three are accounts. Accounts. Acha, sir, what is this, sir? Trial balance and balance sheet are called statements. And manufacturing account, trading account, profit loss account are accounts. Sir, what is the basic difference between these two, sir? Statement is meant to showcase information, friends. Statement is just meant to showcase information. There will be no output. There will be no output. You don't expect any sort of an output. It is just to showcase some information. We prepare a statement, friends. Understand, ma? Statement, which usually a trial balance is just meant for information. Balance sheet is also meant for information. Okay, it is only meant for information and no output is usually expected out of it. But when it comes to accounts, a ledger, an account, there is no, of course there will be information also in this. Of course there will be information in this about a particular aspect, and there will be some sort of output that you can expect out of it. What is that output, sir? As I told, manufacturing account you prepare in order to find out cost of production. I told you, Nama, manufacturing account is meant for what? Cost of production. You will calculate how much is my cost of production. You will calculate and get that cost of production as an output. Gross profit, how much you will calculate and bring it as your output. Net profit, how much you will calculate and bring it as your output. So what I mean to say is, trial balance and balance sheet are just statements, my dear friends. They will showcase information and you can usually don't expect any sort of output. But an account showcase information also and gives you output also. Some sort of output can be expected out of them. Understand, ma? That's a basic difference between both. Again, trial balance and balance sheet are statements. Manufacturing account, trading account, profit loss account are accounts. Understanding, friends? That is how you have to understand about summarizing. Understanding, friends? So till now we have covered identifying, recording, classifying, and now we have covered with summarizing. Summarizing, what do? We prepare these final accounts: trial balance, manufacturing account, trading account, profit loss account, and balance sheet. Okay, sir. Now moving on to our next step. Okay, as much as possible I'll try to I'll try to confine my classes within 1.5 hours, friends. So probably can expect my class to be completed in the next 15 minutes. Okay, so no problem, you can actually revise this any number of times in order to get clarity. Okay, Nama? So let us move on, friends. Let us move on. Now, till now we have discussed about identifying, recording, classifying. Now we have discussed summarizing. Summarizing discussed. Summarizing. All these four discussed. Now summarizing, SA, analyzing. Next 3 steps are very, very easy, friends. Okay, analyzing. What do we do? Once we actually summarize everything, we find out cost of production, we find out our gross profit, we find our net profit. What is this, all these things meant for? Imagine you have gone to school, colleges all these days, correct? Every year they conduct some exam and they will give you marks card, they will give you a report card. Correct, ma? So first of all, why should they conduct exams and why should they actually give you report card and all? To understand how far are you learning, how good are you learning, friends. How good am I learning? For example, take the average class marks. Okay, average class mark is 90. Okay, average class mark is 80%. So are you performing above 80% or below 80%? For example, I got 75%, so I can say I have performed below the average of my class. Okay, I got 85%. I performed above average. I performed above average. Correct, ma? That is where we are trying to analyze how have you done, what kind of work have you done, is it good job or bad job. Okay, when compared to the first rank, how much marks you got, or if you are a first rank holder, congratulations. So basically what we are trying to do is we are going to sit and analyze, my dear friends. For analysis, we have various tools to do that. Say for example, we have something called ratio analysis. Okay, ratio analysis we have, which is a very, very, very effective tool where we sit and analyze our business in variety of ways, especially to find out our effectiveness and efficiency. Sir, what is meant by effectiveness and what is meant by efficiency? Wait for few classes, friends, because we are in basics. I don't want to get into details of it. So, but in order to find out how effective am I and how efficient am I when compared to others and when compared to my previous past. Say for example, mathematics, last year I got 70%, this year I got only 60%. It means my efficiency, my effectiveness has come down. So I compare it with myself or I compare it with my class. Correct, ma? So ultimately I'm supposed to sit and analyze, friends. Of course there are a lot of ways to analyze this, friends. Lot of list is there. Okay, so you can analyze in different ways, friends, but many people will first do is ratio analysis. They will do. Okay, in costing and management accounting you have some techniques, some in financial accounting you have some techniques to analyze in different aspects, which in our further sessions we'll be discussing in detail. But what am I doing in analyzing, my dear friends? I'm going to sit and analyze how best I have performed. Performance can be divided into two ways. In what ways, ma? In effectiveness and efficiency. What is effectiveness and efficiency, sir? Wait for a few days, we'll discuss about that later. Okay, next step. Coming to the next step, identifying, recording, classifying, summarizing, analyzing, and now interpreting. Sir, what is meant by interpretation, ma? Interpretation is all about future. Interpretation basically is all about what? Future, my dear friends. Interpretation is all about future. Now when it comes to future, so imagine you take your report card and go to your parents. What will they do? Shabash beta, you got fantastic marks, just pass. Idiot, go to tuition from tomorrow. I'll get you into tuition. So now what about your future? Your parents have put you in a tuition for the sake of your future. So they have seen your report card, they have understood that this fellow is not going to study by himself, he requires some support. Understand? So it's an interpretation that they have come under for a future course of action. What is your future course of action? To get you into a tuition center. Correct, my dear friends? So that's what interpretation is all about. So interpretation is all about coming into conclusions about your future. How are you going to work? Understanding, friends? Say for example, imagine when Jio has been launched. Okay, Idea and Vodafone both have gone into losses. Because they've gone into losses, they have interpreted that in future it is very tough for them to work independently, individually, so they have merged together. So interpretation that they've got is they cannot work individually, they have merged into one particular company now. Vodafone and Idea together they are working now. Correct, ma? It's a merger that has happened. So joint venture that has happened between Idea and Vodafone. Correct, my dear friends? Okay, so that is what interpretation is all about. Interpretation is all about what are you going to do in the future. So are you going to buy new assets? Are you going to sell the existing assets? Are you going to take new loans? Are you going to repay the existing loans? Are you going to increase your expense or decrease expenses? How are you going to plan for your future incomes? All these things you are going to plan, interpret about your future depending on the analysis that you have done. Understand, friends? Interpretation. Okay, for interpretation also various methods, various methodologies, lot of techniques, lot of tricks and techniques are there, friends. You can actually follow them as well. Okay, Nama. Next and last step after identifying, recording, classifying, summarizing, analyzing, interpreting, and then last one is communicating. So what will you do in the last step, ma? You are going to communicate. Communicate to whom? You are going to communicate to stakeholders. What? Stakeholders, not shareholders, ma. Stakeholders. Try to understand. It is not shareholders, stakeholders. Stakeholders means who? Those who are directly or indirectly, interested in our business. Those who are directly or indirectly interested in our business. Sir, directly or indirectly, who will have interest, sir? Okay, let us take the list. First of all, owners will have the interest. Correct, ma? Owners will have the interest because they are the people who have to take the profits and see the welfare of the company, right? So they will be interested to know how much gross profit they have made, how much cost of production they have made, how much net profit they have made, what is my financial position. Definitely they will be interested to know about business, what is happening. And next we are going to inside the company, if at all you take, your employees will be interested to know about your business. Why employees will be interested, sir? Because if the company is performing well, they'll come and ask, sir, I want bonus, sir. If the company is not performing well, job change. I will leave this company, get into a new job. Employees nama very dangerous candidates. Okay, if the company is performing well, they will come and ask for bonus. If the company is not performing well, leave the company and join a new company. Understand? Very frustrating. Okay, employees. For employees to decide about their future, yes, they need to know about the company's position and all. And next, who else? Say for example, your creditors will be interested to know. Who are creditors, sir? Those who give you goods and other service they provide you on credit basis. What is credit base? I'll let you know later. Okay, in simple terms, you will take goods and services from them now, but you will pay them later. So why will they pay? If at all you have to pay later, they should have confidence on you. To build confidence, we will have to communicate about our business to them also. Next, not only that, you are sometimes government will be interested. Why, sir? As soon as year gets over, government will come and ask for taxes, pay GST, pay income tax. Correct, ma? They'll be interested to collect taxes from you. So obviously government will be interested to know how much is your net profit. Correct, ma? Government is a stakeholder. Not only that, say for example, banks will be interested because they gave you loan number. They would like to definitely be interested to know how your company is performing. If your company is performing well, okay. Otherwise they'll come and say, sir, you please sell your assets, please pay back our loan immediately. So they'll be more and more interested only to recover their loan than to work with you. Understand? If your company is working well, we'll give you extra loan, sir, please take extra loan. Okay, if a company is not working well, they want to take their money back as soon as possible. So all these people are interested. In simple terms, I can say even investors, in general, investors will be interested because investors will be in hunt of good companies. Where there are good companies, I want to go and purchase their company shares. I want to take over those companies. They'll be interested to invest in different companies. What not? Stakeholders, in simple terms, will be interested to know about our business, to know what is happening with our business. Are we effective? Are we efficient or not? Are we improving? Are we deproving? Okay, are we making sense in the business? Are we making profits? Are we making losses? More or less, all these people will be interested to know about our business, for which we communicate about our business in terms of accounting, in terms of accounting. That's the reason we call accounting also as language of business. We call it as what, ma? Language of business, because we speak about business in terms of accounting. We speak about business in terms of accounting, friends. For that purpose, accounting is also called what? Language of business. Understand, friends? So last step is to communicate. Got it, friends? So in this regard, I would like to conclude by saying accounting process is a process which you have to follow in the entire accounting journey. Okay, IRCSAIC, in such a way that first 3 steps are done on a daily basis, next 4 steps are done once in a period, but all 7 steps are to be followed. This is your accounting process. Please subscribe and please share it with your friends so that your friends will also be benefited out of these free classes. Let me know your comments. How did you feel about this class, and any improvements to be done and all. And I accept your all your suggestions. Improve ourselves for our better India.